And welcome to the Traders. Great to have your company this afternoon. My name is Kyle Rodda, the first edition of the Trading Week, so it's great to kick things off. And well, to help me do exactly just that, Pete McGuire from XM joins me now. Pete, good to see you there. Hope you had a wonderful weekend, of course. Really excited to get your view on the current market backdrop. I just thought I'd start with just the chart you popped into your note this morning, just looking at the 5 days that we've had over the last week, and I guess the biggest movers and shakers. We'll get that up now.
Yeah, exactly right, Kyle. I mean, it's been quite dynamic. It's been a great week, and when you're putting your mind back to it, and I'll just wait for the chart to come up. There you are. You know, it gives, I think, the retail land where we're looking as far as activity and what's taking everyone's preference, and that's the numbers don't lie. They're very truthful, and that just demonstrates activity, and that's across global. We've got 10 million clients globally. I'm not suggesting they've all got open positions, but many have many positions. So that just gives you a breadth across many different regions internationally.
Yeah, definitely, and you can have a look at that. It's probably a little bit of a mixed picture, but so much of it might be summed up by that drop in the US dollar index there, down 3.3%. Always good for commodities, always good for equities in the United States as well, typically. So we'll keep an eye on that. And yes, perhaps we'll start with actually an index in the United States. It's the NASDAQ, obviously becoming more important as time goes by because we're heading to a bunch of tech earnings in the next few weeks. But again, from the start of this year, pretty much clearly in an uptrend.
Absolutely. It's been game on. I mean, since really January. We had a hiccup around March as we all put our mind back to the banking sector and what happened there, and everyone was very nervous, but it came out of the blocks again and just punched higher leading just after Easter, and it was just showtime. It's been dynamic. And another thing we've got to be conscious of is a rebalancing of the NASDAQ, and that's something I think all viewers need to probably do their own research on and just appreciate what the governing body of the NASDAQ or the stock exchange itself is going to organise or recalibrate the NASDAQ over the next within the next matter of weeks, I understand, Kyle. So that's certainly an interesting point in itself.
Yeah, definitely. A few stocks there from this AI boom getting a little too big, so a bit of a rebalancing potentially, well, not potentially, it will come through to try and make sure that the big fish there don't move the market too much. But let's continue to talk about maybe some of these riskier assets, risk proxies. Here's the Aussie dollar. Take us through what's driving the Aussie right now, as well as the technical setup in the charts.
Well, I think first off, you can see that channel that's been very much enjoyed from that tight trading range as we've seen in the last matter of time. I'm just getting it up there on my screen as well, and it was range bound there, Kyle, for quite a number of months, and it really showed no excitement to a lot of traders. It was short versus other markets that were so dynamic, like euro or yen or pound. But it's certainly it's performed quite well in the last matter of a week or week and a half, due to pretty much everyone's minds on the US dollar capitulating back under 100. I'm just making a note here. It's about 0.9998 in that US dollar index, down from that 102 sort of handle. So it's even a bit higher. So it's come under enormous selling pressure, the US dollar index. And where we move forward from here, is there going to be a rate rise? We've got some numbers being released this week. What's happening on the 26th of July? And is this the last of the rate hikes for 2023? So, there's a lot of factors at play, Kyle.
Yeah, definitely. A big week ahead. We've just had this Chinese data drop, obviously, in the last few hours, but some local data, RBA minutes tomorrow, jobs data on Thursday. I've got a shout out there too to the ASX, who have just updated their rates tracker tool too. So if you might even be interested yourself, Pete, but you can now look at some more dynamic pricing on the ASX website when it comes to cash rate futures and trying to get that implied yield curve, which of course is a big driver of the currency or a big factor for currency traders. So that one's there for the Aussie. But let's go to US earnings now, and in particular we had financials kicking things off on Friday night. We've got a few more banks reporting in the next few days. Tell us about the results of Bank of America. And, well, I mean, it looks like we're in a bit of a downtrend here for the stock, but, I mean, perhaps showing signs of reversal. I don't know. You tell me.
Well, I think so. I think it's probably been bottomed out a little bit, and you could see a better push to the upside. Some of these bank stocks we're expecting to be relatively stronger numbers than many analysts are expecting, or the analysts are expecting reasonably or okay numbers. So they've all earned quite extraordinary amounts of money as far as deposits. We're looking, I mean, every bank has a different structure. If you're talking about something like a Goldman Sachs that's very much reliant on M&A and investment banking, some of them have performed incredibly well from a trading perspective, but very poor deal flow from a merger and acquisition standpoint to, that big income. And then you've got someone like Bank of America, big deposits and so on. So some of these banks have performed quite strongly in that regard with good earnings. And I just could be a nice little, summer period for a number of these US banks.
Yeah, definitely. And I guess JP Morgan was the other one, wasn't it, on Friday night, posting decent numbers. And, well, who would have thought higher interest rates are good for the businesses that sell the money?
Yeah, they very much are. Yeah, absolutely. That's a point that needs to be taken on board, Kyle. Exactly right. As you've seen that ratcheting up of interest rates, so in turn as the income has been, very, very strong. But they made reference to it in the weekend's Financial Times regarding the strength of a number of these banks and how they've performed. And that'll be probably a global position as well when you're looking at the earnings from, banks all over the globe.
Indeed, and we will have some local banks obviously giving some reports in the next few months, or at least some updates when obviously ASX earnings season rolls around. But we are fixed, of course, on the financials again in the United States for the next few days. So there's Bank of America there, the daily chart, and potentially signs of turnaround. But let's get to some currencies now, shall we? And an interesting play, because we've certainly seen, I suppose, a divergence in policy here, to say the least. Yeah. But I mean, what's going on with this pair? Because, I mean, it's one of the, I would dare say, the key sort of G4 currency pairs at the moment.
Yeah, absolutely right. We have had, the constant ratcheting up as far as rates from the pound, and no movement from the Bank of Japan. So it's been demonstrated there that the currency pair shows us what those decisions look like from a cross rate. And that's the great attraction, I think, from currency trading, is that you've been able to, you can find a currency that you enjoy trading, be it the yen versus, say, US dollar. But then you've got such a large basket of cross rates, yen versus euro, yen versus pound, as demonstrated here, yen versus Aussie dollar, or yen versus, pick the Canadian dollar. So, that's the attraction, I think, in currency trading. You can hold a lot of different positions across different favourable currencies that you've got an inkling towards, and you do your research on them, and then you try and extrapolate those numbers forward.
Yeah, definitely. And it could be an interesting one too. We're seeing that pair turn south at the moment. Been hearing a bit of chatter on the street too, just about the prospect of a Bank of Japan, well, maybe adjusting its yield curve control policy in the not too distant future. We'll have to see. We've been talking about it for a while.
Yeah, I mean, but there, that US, I was worried at 145 to 148 sort of level if we were seeing that from a yen. But now you're at the best part of 138. It's come under enormous. The trade-off, of course, is that US dollar capitulating, Kyle. So, let's just see what happens. There's many moving parts to currencies, and in turn, how central bankers view them.
Yeah, without a doubt. And again, the yen there, pick your trade. It's certainly a few opportunities, as you just said, Pete. Okay, well, let's get to another pair now, which there might be a few opportunities, and we'll take us through the USD chief, because we're clearly in something of a downward trend channel.
Yeah, exactly right. I mean, when you're looking at that US dollar, it's just been, solidly sold off, and you've got the franc, and it's in a channel there, probably further downside. I won't be surprised. It rang the bell the other day. I think on Friday it was around about 99.6 something, the US dollar index, and it's strengthened a little bit from there. But I think it's going to have another return down, and maybe it's got a 98 handle running on it. Swiss franc, as we know, that's it's gold backed, all the sort of numbers about it. So yeah, and not a great currency pair to enjoy trading. And yeah, that chart really demonstrates, wonderful profit potential if you're on the right side of it.
Yeah, indeed. So we'll see what happens, especially as you've outlined there. We've just had that test of that sort of lower bound of that trend channel. That's the last chart that we have in terms of the setups today. But I just had to ask you while I've got you, Pete, some interesting dynamics in the oil market. Now, I know you follow that really closely. What's going on there at the moment in terms of just sort of the push and pull in global crude markets?
Well, I think there's many moving parts at play. First off, you've got a return. This is what's worrying, Kyle. You've got nearly $75 for a barrel of WTI, and you've got nearly 80 for a barrel of Brent, 79.20 or so, and it was through 80. So the issue, I think, is going to be if crude starts to ratchet back up to those early 80s to mid $80 value, then that's going to create, I think, a lot of angst for consumers. And in turn, the inflation spike starts again. I'm keeping a very close eye on the Biden administration and their strategic petroleum reserves and whether they need to fill those back up. And if they do, what price are they going to pay for crude? So these are components of the big oil market, how it all positions itself over the summer period. And naturally, you've got fairly strong demand. OPEC are saying you're going to be around about 102 million barrels a day as far as consumption for 24. So yeah, there's no shortage as far as from a demand picture, and price is always worrying from a inflation standpoint.
Yeah, definitely. And you can only imagine that if we do get a bit of a push higher in oil prices, that could complicate the situation for global central banks and interest rates, and obviously the knock-on effect to part of the equity market. But hey, Pete, really appreciate you coming in today and just running through your morning note, the charts there to watch in the week ahead. Of course, I'm sure we will chat very, very soon. Pete McGuire there from XM.
Thank you very much, Kyle.